Gold is weaker this Monday as the raw commodity sector is under pressure, but our morning quarterback Frank Holmes says gold still holds great value to investors of certain countries. Frank Holmes joins us on the line now. Frank, thanks for being with us. All right, let's start by looking at our gold snapshot today. Would you agree that gold has acted more like a raw commodity than a safe haven asset as the raw commodity sector is slumping badly?
Oh, yes, I think there's no doubt about there's concern globally of massive deflation. What's taking place in China when global PMIs unraveled the beginning of July, pushed down by China, and then we had PMIs come out last night, and once again we have them below 50. They're just not encouraging for an inflationary world. It's very much wrestling with deflation.
Let's turn to countries who are looking towards gold. In your morning commentary, you cite Russia, but what about the Reserve Bank of India? It bought significant amounts of gold when oil prices plunged in the early 90s and in 2009. With India being the world's largest buyer of the metal, could its central bank be a big buyer now that oil prices have slumped?
It could be. I don't think it's taking place. If anything, I think there's lots of currency with it's one of the banks in Europe selling gold down to make the Greeks that not as severe and is damaging. So I don't think it's going to be India at this stage for several reasons, in particular because of the current account deficit. And I think that oil falls to $40, then I think you could probably see that spike in the consumption of gold.
All right, let's pull up a chart that you brought to my attention. While the mantra says sell in May and go away, the current 3-month seasonality suggests selling in July and August, highlighting that the worst 3-month period of the year is August and October. Do you agree, Frank?
Yes, August is always a challenging for the overall stock market. It's been an incredible, difficult time for traders for the past 20 years. But I think that gold usually starts its turn in August. So let's see how that takes place and unfolds with the fact that there's a fight right now. There's a battle in the capital markets between the bond markets and equities. The equity markets and the gold markets are saying that the Fed is going to raise interest rates. However, the bond market is saying no because rates are in fact lower than a year ago. The threat of this global deflation and uncertainty means that there's going to be a turn here that rates actually don't go up and then gold will spring back to action.
Finally, it's a busy week for U.S. economic data, including Friday's jobs report. What's your touchdown pass going to be, Frank?
I think the touchdown pass is the Friday job report. It seems to hinge with lots of trading around the thought of interest rates rising.
All right, Frank, thanks so much for joining us. We'll see you next week. And thank you for watching Monday's edition of the Gold Report. We'll see you tomorrow.